In the previous class, we discussed about the budgets, right? Particularly the functional budgets. Today, we will discuss about the different types of functional budgets and along with the problems and their solutions, right? So, the first problem, the manufacturing company submits the following figures of product X for the first quarter of 2023. Sales 50,000 in January, 40,000 in February and 60,000 in March. Selling price per unit 100. Target of first quarter 2023, sales quantity increase 20%, sales price increase 10%. Prepare a sales budget for the first quarter of 2023. So, we have to prepare the sales budget, right. So, we will prepare the sales budget for the first quarter of 2023. Fine. So, we can prepare it like this. For month January, the units are 60,000. Price per unit is 110. So, if I multiply 60,000 along with 110, it comes to 66 lakh, right. For February, the total number of sales is 48,000, right, and price per unit is same 110. So, if I multiply 48,000 into 110, it is 52 lakh 80,000. And in March, the total unit is 72,000 and price per unit is 110. So, 72,000 into 110 is 79 lakh 20,000. So, and if I add all this, I get the total value and total number of units. So, this is the way of preparing the sales budget, right. Now, the purpose of sales budget is what? It is, the purpose is to see that what is the projected sales, how much sales we can make in each month, so that we can get an idea that what could be my projected sales revenue. And if there is a difference between the projected sales and the actual sales, then we can further deep down into the factors that why it is happening so. Okay. Problem number 2. A manufacturing company submits the following figures of product X for the first quarter of 2024. So, the sales targets in units, right, January 60,000, February 48,000 and March 72,000. Stock position 1st January 2024, percentage of 2024 sales 50%. Stock position 31st March 2024, 40,000 units. Stock position in January and February, again 50%. Percentage of subsequent months sales, right. So, this percentage is subsequent months sales. So, you need to prepare what? We need to prepare the production budget, right. So, we need to prepare what? We need to prepare the production budget for the first quarter of 2024, right. So, we will prepare the production budget like this. So, month January, February, March. Sales, it is given 60,000, 48,000, 72,000, it is given here, right. The closing stock is given 50%, right. So, 1st January is percentage of January 24 sales. So, it is 60,000. So, 50% of stock position on 1st January is 50% of the previous month, right, is a subsequent month, sorry, is a subsequent month sale. So, in subsequent month it is 48,000. So, 50% of 48,000 is 24,000, right, and for February it is 50% of 72,000. So, it is 36,000, right, and on 31st March it is given here, it is 40,000, right. So, this is my closing stock, right. Now, what is closing stock in the previous month? That is the opening stock here in the next month, right. What is the what is the closing stock in the previous month? will be the opening stock in the next month. Fine. Okay. So now if I calculate, right, the production units, right, I can calculate the production units, that is opening stock plus production minus sell, So what is my formula? Formula is what? Formula is opening stock plus production minus closing stock is equal to sales, right? So I can, for January, I can write it like this. My opening stock is 30,000 plus my production is, I don't know what is my production, let's see, it is P, minus closing stock is 24K is equal to sales is 60K, right? So my production will be how much? 60K plus 24K minus 30K. So it comes to 54K. So this is 54K here. Fine. Okay. So similarly, I can calculate for the month of February also, for the month of March also, right, the production units, and my production budget is complete. Okay, fine. Okay, next problem. Draw up a material requirement budget, quantitative, from the following information. Estimated sales of a product 40,000 units, right? Each unit of the product require 3 units of material A and 5 units of material B. 3 units of material A and 5 units of material B. Estimated opening balances at the commencement of the next year. Finished product 5,000 units. Material A 12,000 units. Material B 20,000 units. Material on order, material A 7,000 units, material B 11,000 units. The desirable closing balances at the end of the next year. Finished product 7,000 units. Material A 15,000 units. Material B 25,000 units. Material on order, material A 8,000 units and material B 10,000 units. So this is the information given. I have to prepare one material requirement budget, right? This I have to do. So estimated production during the next year is not given in the question. It is calculated as follow. So estimated production is equal to expected sales plus desired closing stock of finished goods minus estimated opening stock of finished goods. 40,000 units plus 7,000 units minus 5,000 units. So 42,000 units. Now I am preparing the material requirement budget, right? So material A and material B. Fine. So material required to meet the production budget, material A 1,26,000, 3 units into 42,000. For material B, it is 5 units into 42,000, so 2,10,000. Desired closing balances of materials at the end of budget period 15,000, 25,000. Estimated units of materials to be on order at the end of budget period 8,000 and 10,000. 1,49,000 and 2,45,000. Less estimated opening balances of materials at the beginning of the period 12,000 and 20,000, and total width is 1,37,000, 2,25,000. Less estimated units of materials or order at the beginning of the budget period 7,000 and 11,000. So it is coming to, if it coming to 1,30,000 and 2,14,000. It is coming to 2,14,000. Fine. So this way we can calculate, you can create the material requirement budget. Fourth question, the following details apply to an annual budget for a manufacturing company. So, 4 quarters, first, second, third and fourth, working days 65, 60, 55 and 60. Production units per working day 100, 110, 120 and 105. Raw material purchase percentage by weight of annual total 30%, 50% and 20%. Budget purchase price 1.05 and 1.125. Quantity of raw material per unit for production 2 kgs. Budgeted opening stock of raw material 4000 kgs and budgeted closing stock of raw material 2000 kgs. Calculate the budgeted figures quarterly and annual purchase of raw material by weight and value. So, it is raw material purchase budget, right. So, there are 4 quarters 1, 2, 3, 4. Consumption, it is 13,000, right. We can calculate, you can see the working notes here. Consumption is equal to working days into production into quantity of raw material per unit of production. So, it is 65 into 100 into 2, 13,000 kgs, 60 into 110 into 2, 13,200 kgs, 55 into 120 into 2, 13,200 kgs. So, I can write here 13,000, 13,200, 13,200, 12,600 from here, right, total 52,000. So, add closing stock, 2,000 kgs less opening stock 4,000 kgs, right. The purchases I can calculate, it is given there. For quarter 1, it is 30% of 50,000, that is 15,000 kgs. Quarter 2, 50% of 50,000, that is 25,000. In 3, 20% of 50,000, that is 10,000, right, and total is 50,000. So, price per kg, it is given there 1.05, 1.124. So, if you multiply, so you will get the value of the amount of purchases 15,000, 26,250, 11,250. So, total is 52,500. So, you can get an idea from raw material purchase budget that how much raw material will be required in the forthcoming quarters, forthcoming months, and you need to make the provision for them. Okay. So, please go through these problems. If you have any queries, please revert back to us. Thank you.